You all on behalf of the Corporate and Commercial Banking Center of Scotiabank, CCBC for short. And I just wanted to talk a little bit, just a few minutes, about what we do. The CCBC is a unit of individuals dedicated to service delivery for our mid-sized to large corporate clients. We operate as chief liaison for our clients to access both lending and non-lending products. Our team of professionals apply their specialized training in the delivery of customized solutions to suit your particular business requirement. Our focus is helping your business to succeed. Pablo and Adrian have given us expert insight into the economic environment, conditions over the last few years, and what we could expect in the near future. Of course, given the close working relationship with our clients, we in the CCBC have seen how your businesses have been affected or impacted by the downturn in the economic environment, and for many of you, the past few years have been challenging. We understand how you have had to navigate the waters of rising energy costs, a devalued currency, and the inflationary effect of these on your operations, for instance, raw material and production costs. We know that you have experienced weakened consumer demand and the pressure to compress margins to protect market share. For some of you, there are unfulfilled export opportunities due to uncompetitiveness, with a positive external environment, as indicated by both Pablo and Adrian. And for others, you now have lower income from securities in an environment with fewer opportunities to diversify revenue streams. And I mean, these are just some of the effects that we have experienced and we have seen with the downturn. In the context of this environment, the team at CCBC has been able to support our clients in various ways: debt consolidation, capital for business reengineering, managing foreign exchange exposure, capital redeployment, creating new investment opportunities. As you may have noticed in our last annual report, we continue to provide cutting-edge financial transactions, for example, multi-currency, multi-jurisdictional for Facey Group, pre-export financing for Jamaica Cane, participation in a $150 million US syndication for Digicel, and our participation in the largest local syndication, $115 million for National Water Commission. Thank you. As Adrian has highlighted, the outlook is for weak improvement if we are able to implement the reform measures and eventually grow our way to recovery. As you evaluate and deploy your own plans for growth, and growth we must do, Scotia looks forward to being your bank of choice, leveraging our internal partners, both locally and overseas, to deliver appropriate products and services for you. Now, as we move into the question and answer section, we welcome your thoughts, not only on the presentation, but also on the opportunities for a closer alliance with you and the rest of the business community. Thank you so much for sharing with us this evening. And now, back over to you, Doctor.
Thank you very much.
The latest growth numbers, the economy is estimated to have grown minus 0.5% to 0% in the financial year just ended, and the projection is for growth of 0.5 to 1.5%. question to you, and the downside risk to this, the governor informed us, was what happens in the external markets. The question for Mr. Baird or Dr. Stokes is this a realistic growth number going forward based on what we are learning that's happening not only in the emerging markets but also among our traditional trading partners? Thank you.
Okay, so thanks for the question, Owen. The first thing is that there is a lot between minus 0.5 and 1.5. You know, there's also zero inside here, right? So he wasn't necessarily, you know, being incorrect. But to be, you know, to give you a serious answer though, is that the prognosis is for weak growth. Now, whether you call it, you know, 0, 1.5, you know, minus, you know, doesn't make much difference to the growth needle. And so essentially, you know, the central bank governor could have said that the economy is going to remain flat to slightly negative. And I think that would have characterized properly what we should expect for this year. And, you know, and that's just because a number of the factors that we have been talking about in terms of the structural impediments to growth, and therefore you won't see robust growth in the short term, irrespective of what happens in the international market. You know, keep in mind that Jamaica was growing subpar, even when the world, you know, prior to 2008 was growing above 5%.
Pablo?
No, just I think I support everything that what Adrian said. I would highlight two things. One is, given the challenges of the Jamaican economy, if we see progress on advancing, you know, those structural impediments to growth, I think we have to celebrate that, irrespective of the overall number that we may see, because most of the structural change and needs adjustments that need to occur, usually the impact of that is usually, you know, in the longer frame. So, and Adrian highlighted that perfectly well, that the range is really large, but it's immaterial from this perspective. Externally, I think the risks to growth are particularly coming also from the United States. If there's any accident on the fiscal side and on the political environment in the U.S. becomes very troublesome just to address the fiscal issues, which is always a bit of a wild card. But overall, as I highlighted in my presentation, you know, the conditions in the U.S. are improving, and that should just have a bit of a mitigating effect, you know, if we see remittances flows coming back. But all in all, I think we have just to look for doing the right things just to create those structural conditions to growth, and that it doesn't matter if it grows 0.5%. It's just if we see advances, I think you will see Jamaica benefiting. So.
Thank you. Right, questions. And that was Owen James. He didn't say, but I assume he's a household name, so he needs no introduction. But any other questions, please? Yes.
I did not hear any comments on the external variable that plagues this region, that is natural disasters. And I wanted to find out, in your economic model that you run, making these projections, given the history of small island states like Jamaica and this particular region, based on studies that have been done in the past, which shows that these natural factors are major contributors to our debt stock, it is almost certain that we will have to confront them going forward. How do you factor that in the equation and deal with that if you were to recommend a set of policies or programs to governments?
So Pablo gave me a look, so that means it's me.
I can comment, but I don't know.
So,
what I'm gonna say.
Jamaica is a part of a regional insurance block, for want of a better word, right? The problem with that is, you know, you have to be hit really bad, right? You have to get a really bad hit to get any money from that. But it's a real question that you're raising, and to be honest, I've raised a 1% GDP gap in the program. So in other words, $15 billion. I think they need to fully fund the program. But that does not factor the point that you have made. And historically, well, you know, when you think about the weather-related systems, you know, they have cost us anywhere from 1% of GDP, upwards of 1% of GDP. So, you know, I'm not sure in terms of latitude or degrees of freedom, in terms of how much the leeway the IMF will give to us, but it's a real concern because the program is tight as it stands. And the growth issue is a massive one because, again, that tends to put a serious drag on growth, again, which increases the chances of failure.
So we refer to the Caribbean Catastrophe Risk Insurance Facility, as you said, that broad-based parametric insurance that covers the damage has to be huge. So yes. A few years ago, the suggestion came to the government to consider reinsurance at a smaller level, to have that in tandem with a large parametric macro model. And I don't see anyone from the Ministry of Finance here, for example, but it's something we can probably pursue to see where is that program now in terms of moving forward with an insurance program geared at the micro level to be merged and in tandem with what we already have existing at the macro level with the CRIF. But I think it's very useful that we can't just wait for these exogenous shocks and then take time to rebuild. So we have a roving mic. If you don't want to get up, you can just raise your hand and we'll bring the microphone to you.
It's a question as to what he spoke about growth and the weakness of growth projections over the short term and the medium term. And I'd like to ask him, what does he think are the three main obstacles to growth in Jamaica and what are the possible solutions?
I think the first one is, let's call it a political economy problem, and I want to say that because, you know, Senator Tufton is here. That, you know, there is a failure to stick to fundamental issues over the electoral cycle. And I think, you know, there's a problem. In other words, we do not have long-term planning, right? So I would identify that as a major problem, a major risk. The other issue that I would speak to is, and it's something that the IMF has actually earmarked for significant change, is the waivers and incentives regime. Now what that does, the current regime, it distorts the economy. And let me give you a little bit of context. If you look historically, only DOMREP and Trinidad have received more FDIs than Jamaica over a 15-year period. But yet, we have, as Pablo showed, the worst growth record in the region. So there hasn't been a linkage between the FDIs coming to Jamaica and the growth. You want to know why? The FDIs that come to Jamaica tend to go to favored industries. It so happens that those industries don't add a lot of value to Jamaica. They add a lot of value to the investors because of incentives that they have been received. And so all the benefits pretty much accrue outside of the country. So you need to solve that problem. That's a massive problem. It distorts the allocation of capital. The other problem is just the ease of doing business. And that's an easy question for me because that's something that Don sits on the EPC and us, we're working through right now in terms of reform measures that we can recommend to improve the overall business climate. So it's just hard, and if you speak to business people like yourselves, you will hear of the horrendous experiences that you have in doing certain things. So I think those three issues, not necessarily listed in any kind of order, if you solve those or at least have big movement in the right direction, I think that will move the growth needle.
Yes, go ahead. Thank you.
For Mr. Stokes. My name is Claudia Williams. My first question is, do your projections anticipate a possible fallout, economic fallout from loss of business to Panama after their canal is finished? And if so, if not, how would your graphs change? Second question, do you think our ambitions for financial prosperity would have been better or would have been more successful if the government had completely defaulted on the interest on the local debt and had included the global bonds as part of the Jamaica debt exchange? And my third question is...
Wayne, you're writing on, all right?
My third question is, what do you realistically think is the probability of a third debt exchange?
Wow. So I'll leave the third one to Bruce, and I'll take the first two, right? So we have not explicitly modeled for that scenario in terms of the Panama situation. What I can tell you, however, is that we have fairly minimal growth in the projections, and how our growth projections are actually in line with what the IMF is seeing.